Welcome, everyone. You're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance, and much, much more. I'm Joe David, the founder of Nephos Group in Minor. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now on to the next episode. Welcome everybody to the latest episode of the Nephology podcast. I'm delighted today to be joined by Stephen Wundke from Algoz Technology. How are you, Stephen?
Yeah, great. And great to see you, Joe. And well done on what you've done so far. I think the podcasts have been brilliant, and hopefully we can bring a bit more flavour to them.
Absolutely. No, thank you for joining. We've actually got a checkered past is probably the wrong phrase, but we've known each other for a long time, and our past
In
was
crypto terms,
exactly. And our past kind of crossed in a different light. So why don't we start with a quick summary of you and your kind of background, how you got into crypto, and we can kind of go from there.
Yeah, I guess crypto came about in a strange way. I've always been a trader in various markets, and most of the marketing that I used to do was involved in high finance margin trading. And I did the marketing for a number of companies there. And obviously, the new kid on the block in sort of 2016, 17 was this thing called Bitcoin and Ethereum, virtually just those two at the time. And of course, anything that has volatility is always interesting to someone who's a dyed-in-the-wool trader. And so, no different to anybody else, I made a point of finding out about the blockchain, finding out about how it worked, trading it. Had I had the brains to just buy some and stick them away in 2016, probably you and I wouldn't be talking, or if we were, I'd be sitting in the Bahamas next to Sam's place, but that's a different matter.
Indeed.
And then I got involved with a couple of guys. One was out of Ukraine and the other was out of Cyprus, and smart guys, a lot smarter than me, but they needed a mouthpiece, and so I got the job. And we developed a blockchain ticketing company, and that went very well in terms of what we created, and we ended up selling that onto somebody else. And after that, I got the opportunity to work in the very early days at Celsius and set up their corporate department for them. They didn't have one at the time, and latterly that's where I ran into you. But it was an amazing time, Joe, to be there in the early days. I think I was employee number 82 or something like that in the space. And by the time things sort of came undone, we were up to close to 1,000 employees. So it was an incredible rate of growth in a very short space of time.
Yeah, which I'm sure we can touch on,
Sure.
briefly and as an overview in a second. So then, leaving Celsius, you then did something else before Algoz, or was it straight into
Yeah,
Algoz?
I worked for a little while with a company called TIA, a fabulous organization based out of Switzerland who run arbitrage. They were in the process. I ended up having to move from there prematurely simply because they were in the process of going through some FINMA regulation stuff, and it didn't suit with me being based in the UK. And then I started talking to the people at Algoz, and they set me a challenge which involved how do we become more attractive to people in the crypto sphere. They're brilliant at trading, and we'll get onto that later on. But ultimately, had it not been for the experiences of 2022, we wouldn't have created the product we've created now. So in a lot of ways, which you and I have discussed before, what happened in 22 was actually pretty pivotal, I think, to what's going on in crypto.
Yeah, well, that probably leads us then quite nicely into that kind of segment. Yeah, I mean, I guess there aren't there are probably a few people, but there aren't many people that I've spoken to that have got such an insight into what kind of some of the bits and pieces that happened in the 2022 year. We had Luna, we had Celsius, and we had FTX all falling off the face of the earth, and all, to be honest, all three of them very, very, and obviously we had contagion from that. So we had 3AC and we had BlockFi and all those different bits and pieces, but they were the three kind of core ones, if you like, that ended up, driving the rest of the market. And I think I think it would be fair to say that those three in particular were all a surprise to everybody out there. I think all three of those people thought were pretty good, solid infrastructure based systems. So yeah, obviously you were at Celsius. What can you tell us? Obviously, there's stuff legally that even if you did know, you probably couldn't with everything that's ongoing. But yeah, what can you tell us from your side in the last year, and how was it? What was it like being in the space during that period?
Well, it was absolutely fabulous because we were moving very, very quickly. In reality, we moved too quickly. The failure of Celsius was not down to any of the frauds or the malpractice that you've seen in some of the others. It was simply down to bad management. I think it's known now that the net interest margin that the company was operating on was wrong. And when you've got a net interest margin that's wrong and you've got less than $1 billion under management, you can probably, and it's only a little bit, you can probably make it right. But when you go from less than $1 billion to 25 billion in a year, and you've got a net interest margin that you're probably not aware of that's wrong at the time. And by that I mean, for those who are not sure, the difference between the amount that you're paying out to your customers who are lending you the coins and the amount for those who are borrowing is wrong, then you've got a problem. And the sad thing about it, more than anything, is that actually Celsius fixed that, and they had it fixed, but it became the Luna problem escalated anything. And if anybody hasn't read The Crypto Titans by Marcus Thielen, I would recommend it. It's a must read. He covers this period extremely well and explains why the Luna Terra collapse caused so many problems further down the line, and why it simply wasn't possible for things. In retrospect, it was obvious that things were going to collapse, and FTX was the final one of the cards that fell over in the house of cards. But Celsius's problem wasn't around that initially, because they didn't lose money in Terra Luna. And in fact, it was Sam Bankman-Fried who said that Celsius forward ran their disposal of Luna because they didn't take place in the recovery plan that caused the problem. And of course, then there was the highlight for Celsius around the locked ETH and some of the Bitcoin and an illiquid position. And of course, once you get a bank run, stopping a bank run, no matter what you say, let alone if you have got a hole in your balance sheet, is difficult.
Absolutely, and we've seen that. People can slate crypto, people can slate Celsius. And I'm not. I didn't. I luckily at the time of the collapse, I didn't have significant funds on Celsius or FTX. But people can slate these institutions. But like you say, I mean, we've seen since with things like Silicon Valley Bank and things like that. An institution that a lot of people would have said, oh well, crypto are at fault, but there's no way, someone like Silicon Valley Bank, who, are supporting all the fast growing, amazing tech firms, et cetera, would possibly fail. So I think it, like you say, once a bank run starts, I mean, then the name is in the title. Once people start to take money out of a bank, it's impossible for any financial institution to cover that. I guess the issue with FTX, and I don't know about Celsius, but was the question around what funds were being used for, if that makes sense, and were those funds appropriately managed? Were those funds, being used in the right place? And you don't need to comment necessarily if you can't, but that's the questions I think people had. It's not so much were they surprised it failed, but more that were the funds being used in the right way, and if they were, would it have failed? If that makes sense.
Yeah, I think the transparency of what is happening with your coins is one of the key facts that comes out of the whole of, and I describe it to people that in 2022, 22, the crypto industry as a whole behaved like the teenager whose parents have gone away for the weekend. There were very few rules in place, so they basically did whatever they wanted to do. And of course, that tends to come home to roost. And actually what we're seeing in 2023 is a better marketplace. So I use the example, which you've heard me say before, that the total defaults last year adds up to around 30 billion. If you take Three Arrows, Voyager, Celsius, FTX, added up, it comes to around 30 billion. And that's not great. Don't get me wrong. That's not great. And if it's your funds, it's terrible. Hopefully a lot of people will get almost all of it back in most cases. But if you go back to 2000 to 2010, over a 12-year period, Bernie Madoff ripped off the American public for $65 billion and had
Mm.
4 SEC inspections. That's over a 12-year period, right? Now, all of this so-called wrongdoing by the companies we mentioned previously in crypto was all exposed within a year. Why? Because the transparency of the blockchain allows you to see what's going on. Whereas in TradFi, if you and I were designing a money system now, we wouldn't design one that involved cash. It's just too invisible. We don't know who's got it. We don't know where it goes. Whereas in the case of the blockchain, whatever anybody says, it is actually the worst thing for trying to clean money, as people have shown.
Yeah, no, for sure. And the interesting thing with the Bernie Madoff stuff was, you know, he was doing that in a room below or 2 floors below, whatever, his legitimate business, and nobody bothered to ask the question, or nobody bothered to open the door and see what was going on. Like you say, it was it yeah, it was insane in terms of the different, and this is the funny thing about this in a sense of, you know, crypto scams and you know, crypto fraud and all that sort of stuff, and we're not, yeah, we're not condoning obviously anything, and if there was any illegalities, you know, on any of these entities, then hopefully those involved will be, you know, the repercussions will be had, and and I hope that people get their money back and all those sorts of things. But you know, I can't log on to my bank account any day at all and make any payment without being warned about 55 times about a scam that might be happening. And the thing that makes me laugh about that is everyone says that crypto is the scams. Crypto has all the scams, blah, 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 blah. But actually, you can't do anything on your bank account because they're so worried about the kind of the TradFi money being scammed. So we do have to put it in perspective, like you say, and people, you know, people that have lost money in any of these scenarios, I feel for them, and you know, I hope that they are able to recover the majority of that, if not all of it. But yeah, we've got to sometimes put it in perspective, haven't we?
Yeah, and I think, Joe, there's you know, the blockchain is immutable. The blockchain is visible, right? Whereas I've got some friends who've had a terrible situation in some FX trading, nothing to do with crypto. And I've said to them, how do you know that the balance they're showing on the screen is actually yours until you can take it off? I can put any set of figures in front of you in terms of what does my account look like, including your bank balance that you said, what does it look like, right? We don't know. And until we want to use it and put it somewhere else, you know, we talked about bank runs. The only reason there aren't bank runs on banks as we know them is because they have behind them a Reserve Bank or a Bank of England guarantee that they'll get paid out. Because ultimately, whereas crypto might have been taking in $1 and lending out $3 or $4 from a hypothecation point of view, the banks are up to taking in $1 and lending out $20, right, against that, or lending $20 against that dollar. So they wouldn't survive a bank run either. It's just a question of who is it that's supporting you, right?
Yeah, agreed. And I guess my and I'm totally with you on that. My only kind of comment, I guess, or argument, if you want to call it that, against that model is let me talk about FTX from what I know of FTX, not of Celsius, because I don't want to ask.
No, they are very different. Let's make that right.
But they are different. Yeah, no, I agree. And let's take the FTX example. And the FTX one was more. It wasn't so much that the bank lend more than an FTX, or you know, the bank use the money differently, or it's the fact that as far as FTX and the rest of the world as far as the rest of the world were concerned about FTX, was the money they had on deposit was not being used for other purposes. It wasn't that they knew it was being leveraged and the leverage failed, like a bank, for example. It was that they didn't believe it to be. They believed that the number on their balance was the number, and a bank run therefore shouldn't have affected it, because for every Bitcoin that was deposited, there should have been a Bitcoin held in the segregated account. Whereas with a bank, we all know that isn't the case. We all sign up to that. There's no hidden secret around where the bank's money is. In a sense of like, we know that they don't hold it on account waiting for us to walk up to the cash machine and take it out. So that's my only kind of, I guess, answer back to that is from an FTX perspective anyway. They should have had it, and they didn't.
And we know subsequently, because we've seen the figures, that in FTX there were lots and lots of coins moved between places that shouldn't have happened, allegedly. And ultimately, you know, there was people have said that that results in a huge amount of fraudulent transactions. Now, time will tell where that ends up. I don't think that is mismanagement. I think there was wrongdoing there. But hey, let's see.
Yeah, we'll find out, and the courts will decide
And
that,
you
I
can't
guess. But
stop that anywhere, Joe. Willie Johnson in the 30s and 40s was put in front of a judge 3 times for robbing banks. And the judge said to him on the 3rd time, why do you keep robbing banks? And he said, because that's where the money is. So wherever there's money, someone's going to try and steal it, right?
yeah, for sure. No, I totally agree. Totally agree. So, um, but what I guess, and again, I don't want to make such a positive out of a negative, especially when people have lost, life savings and things
Yeah.
like that. But I guess with every negative, there is a positive. With every bad situation, there's a positive situation. So, what would you take away from the 2022 period of craziness, if you like, as maybe some positives we can look forward to for 2023 and
Yeah,
2024?
I think it's already happening, Joe. I'm seeing that companies are acting in a different way. There's a lot more transparency around, and there certainly should be, around balance sheets where possible. We've touched before about you're the expert in the accounting side of things. Not a lot of companies were in a position because almost the entirety of crypto was built on a stack of Excels that didn't necessarily talk to each other. They're starting to realize that's not good enough anymore. So they're putting better accounting procedures in place. I think that gives people confidence. I think generally they've realized the recursive leverage that they used to take part in last year, and Three Arrows were particularly guilty of that. That's not acceptable anymore. You can't borrow money on top of money on top of money anymore. I think it's made for a much clearer investment sector, and we've gone out of our way to create a product in exactly the same way to get rid of counterparty risk, and we've done it. So, or not, I shouldn't say all counterparty risk because the trading is still a risk, but ultimately to get rid of exchange and management counterparty risk. That's been something that we thought that's not acceptable anymore. We should be able to get rid of it, and we have. And I think that is an environment that wouldn't have existed before 2022 happened.
Yeah, agreed. And I think you're right on the accounting piece as well. Accounting has never been the most exciting of subjects. I totally appreciate that, and I understand why. Why people never really, especially in the crypto world where they had all these, other crazy fun things going on. Why accounting was never top of the priorities. But I think you're right. I think now it's shown the value of what good accounting can do, and it's shown what bad accounting can do on the other side, or lack of accounting can do on the other side, and lack
Yeah,
of
exactly.
planning and financial forecast. And I've said to a few people, I'm not saying that someone like us could have saved FTX from happening, because ultimately fraud's fraud, and if it was
Yeah,
just downright fraud, you can't stop downright
can't stop.
fraud whether you
Yeah,
want to or not. I'm pretty sure from what I read about the Bernie Madoff stuff, he had an accountant on board signing off all the dodgy stuff at the same time. So that you can't stop fraud to an extent, but what you can do, and this is where we come from now, is we want to make the space more mature. We want to make the space more positive and growth. And what that means is, by this issue highlighting to companies that accounting is important, hopefully more engage with us, and therefore hopefully less projects will fail going forward because they've engaged when they wouldn't have engaged maybe in the past. So that's the kind
exactly
of the
right.
spin of the positive that I would
And I
take.
think the people who are funding those companies, Joe,
Yeah,
should insist that if you're a VC, that you say, hey, Joe's company, right, you've got to put these
yeah,
procedures in place because we're not going to allow you to function in the way that we did in the past. And we want accurate reporting at all times. And I think that's the kind of things that we're seeing now, this whole transparency. We looked at the traditional hedge fund and said, that doesn't work anymore. You shouldn't have to wait until the end of the month to know how your fund has performed. You should be able to see those things in real time because crypto trades 24/7, 365, and it moves very fast. Worrying for a month to, I wonder how we got on last month. That doesn't cut it anymore. So, we got rid of those barriers. You should be able to have your cash when you want it, or your coins. You shouldn't have to wait 30, 60, 90 days to get it. So we got rid of that as well. All of those things are all part of making it more responsive for people in crypto. And that's the growing up of the industry. And I think it wouldn't have happened
100%.
without 2022.
Yeah, no, I totally agree. And that's probably a good segue then into the kind of Algoz product itself. So yeah, why don't you tell us a little bit about what you guys are doing, why it's
Yeah,
different,
yeah,
and yeah, what the plans are, I guess, for the business and
yeah. Well. First of all, we are a quant trading firm, and we do have traditional hedge funds in the way that people would understand them, where you can subscribe, and we run a fund, and that's fine. It works great for fiat customers. I didn't think it worked great when I went to Algoz for people who own crypto, because we want to earn in kind. If we've got, let's talk about Joe's 10 Bitcoin that he's got. Today's value could be $300,000 worth of Bitcoin, let's say, right? What we decided was, look, let's go to a custodian, let's get a wallet, and Joe can put his 10 Bitcoin directly into that custody wallet and enjoy the protection of the custodian for those 10 Bitcoin. But we didn't want the custodian to list that as an asset. So what we said was that needs to be held in trust. So they agreed to do that. We then went to a couple of exchanges and said, guys, what we want to do now is you can see Joe's 10 Bitcoin, $300,000 worth. We want to mirror that balance in a trading account with you, and we want to trade the collateral. We don't want to send you those coins. We want those coins to stay at all times in that wallet. And they agreed. Yeah, okay, we'll do that. And then all that happens is we trade the mirrored wallet, not the coins, and we then reconcile the trades. And if we make 0.25 Bitcoin on some trades we've done, we put that directly into Joe's wallet. And if there is a loss of 0.005 of a Bitcoin, we reconcile that trade and we allow the custodian to move that small amount to the exchange. Other than that, the coins are never touched by us, never touched by the custodian. And so therefore, if any of the counterparties were to go bankrupt, your coins remain the beneficial ownership of you. And that's what we think is the most important thing. We also then said, okay, you should have your coins when you want them, and you should be able to see all these trades. That's important.
yeah, no, totally. And do you know it's funny with the way we talk about, it should be really important that you can see the trades, or it should be really important that you can have the money when you want it, and all these
Yeah,
different bits and pieces that we see as these new crazy things, and it's kind of like what, like you say, it should always have been that way. We should have
yeah,
always had. We've got this. We talked about it probably, I think maybe before we came on air, if not during, but around this whole crypto is actually the most transparent system
yeah,
that's ever existed, and why we ever felt that having a system that like as transparent as crypto would then be used for illicit funds in any more than a bank would or cash would or any it's crazy. So it's great to hear what you guys are doing. Just you mentioned kind of quant trading and things like that, but
yeah,
maybe just explain for those that don't know, what if I'm a client, what do I want? Sorry, what do I expect from you guys? Where I come to you and I say
yeah,
I've got $100,000 or
yeah.
whatever it may be. What's the process? What would I expect you guys to
Well, first of
do,
all,
and
you
what
have
would I
to go.
expect in return?
Yeah, first of all, you have to go through KYC and AML. That's important. Even though we don't touch your coins, we need to know you're a bona fide person to be trading for.
Hmm.
Secondly, you need to have one of the top 30 coins because they need to have a collateral value where there's volume that can be traded, etc., etc. Then what we have is we have four strategies. We won awards for our strategies the way we traded them last year. But we have four strategies, and you can choose one of those four strategies. We we're trading those all day, right? So ultimately, we're looking for opportunities and we trade. There's no commingling of coins because your coins never leave your wallet. We're actually trading your wallet for you, right? We're doing the heavy lifting. You're looking at it all the time and seeing how we're performing. And if we're performing rubbish, you just say, hey, Stephen, I want my coins back. And we send a note to the custodian, they send them back to you. So we live and die. And basically, we're a model where you pay a 2% management fee and 20% of the success fee. But if we don't make 2% in a quarter, we have what's called a hurdle in place. We don't make any money. So that's how we make our money, by being successful in terms of trading your coins for you. And I think it's the fairest system that I know for people who want to passively invest their coins. If you want to trade 24 hours a day, 7 days a week, then good luck to you. That's hard work, but you got to sleep at some time. And what we find is the worst things always happen when you're sleeping or away on holidays. So let someone else do the heavy lifting.
Yeah, no, for sure, and it is. I do know some very good traders. You know, we act for them.
Yeah.
We, you know, and they are excellent at what they do. And but whenever I talk to them, I've got one that I know of well who, if he does listen to this, will know who he is when I'm talking about him without me even naming him. But you know, we had this entertaining battle of who's got the most screen time on their phone, because I get moaned at by everybody around me that I'm on my phone too much, and I think mine's like 5 hours or something a day, which I thought was quite a
Yeah,
lot.
seems all right. Yeah.
And then I went to this. I went to this guy. I'm going to find out what my actual screen time is now. So my average at the moment is 4 hours 37 minutes. So we're down 15. We're down 15% from last week. So we're doing well this week.
Yeah.
So and this guy was 14 hours a day on his phone. He trades
Wow.
on his phone. He trades, you know, through Binance, and so he's not
That's
sat with 15
extraordinary.
different screens. And you know, so we're talking about somebody that spends, you know, the majority of the day obviously on their phone trading, and like you say, where does that leave you then to have any downtime or what have
And
you?
also,
And
Joe,
you know,
it's not sustainable. That's the problem, isn't it? You know, it's not
yeah,
sustainable.
yeah,
And I think that's and
yeah,
if you want to do it, that's great. You know, I admire people who do it. I think it's really, really hard. We just think being an external trader for somebody and paying us on a success basis is something that makes sense. And, you know, we won 2 awards. We won the US Hedge Week Award for trading of one of our funds. We won the European Hedge Week Award. And we've got 4 nominations in the APAC region that are live just at the moment. So vote for us if you get a chance. We'd love to win another one.
indeed, yeah, for sure. So, and with the product itself, do you have minimum investment? Do you have minimum, you know, do you have
Well,
different client types, or how does that part
yeah,
work?
it's important that they are either accredited or sophisticated investors. That's part of the, if you like, the regulation area of it. So that people just need to testify that that's what they are. Obviously, we also deal with family offices, we deal with
Hmm.
asset allocators, etc., etc. But from a high net worth individual, accredited and professional, sophisticated investors, depending on which part of the world you're in, that's an important attestation that you need to be able to make as well.
And minimums?
Yeah, 100K is the minimum that we'll take on this
Yeah,
platform of whatever coin it is that you've got.
yeah. No, that makes sense. And on the point around you know, accredited investors and regulation and all that sort of stuff, where are you guys based, and do you have any regulatory kind of affiliation, as it were?
So that comes within the normal hedge fund. It's very difficult for this to be a regulated product because actually we never touch the client coins, right?
Hmm.
So this operates under an exemption. And because the coins never leave the wallet, there isn't anything that we can sort of regulate against for this product. However, we still go through what a regulator would require, which is the KYC and the AML and the practices you'd expect from a company, even though they don't have a block for this product just yet. But because your coins always remain your property, actually we're almost more a SaaS product than we are a regulated finance product. What you're looking at is, hey, we've got rid of the counterparty risk here. What we want to know is, can these guys trade? Because that's what you're allowing us to do, right? And if you don't like it, you're out.
100%. And ultimately, you guys don't get paid if you don't trade
That's right.
well. So,
That's
you
right.
know, it's a model that reflects the how well the performance
We don't run
of
leverage on this, Joe, either. So it's not like, you know, you put 100K into your account and we're trading at 500K and you risk losing the lot. These are unleveraged. So we're just
yeah.
trading the collateral as the collateral, right? That's important.
Yeah. No, yeah, absolutely, it is. Um, where are you based?
All the brains, I'm based in the UK, but all the brains are based in Tel Aviv,
Hmm.
Israel. And they've got a history going back to 2011. The parent company has been trading TradFi in quant trading since then. This operation with Algoz, which is the technology crypto side of it, has been going since 2018. and we've got a pretty good track record. I mean, better than most, hence we win the awards that we do. I think we're very
Yeah,
strong,
no,
both in fintech and
yeah,
trading.
yeah. It sounds that way, and it's definitely something that people need to consider. I think when they're looking at, especially now, as we talked about the market being more mature, and do I remember last year, slightly off topic here, but I remember last year or the year before probably the year before actually getting quite heavy into some of the DeFi products and, you know, yield farming and all these different bits and pieces. And you have to spend so much time and effort tracking these things. And yeah, I maybe made some money over a few weeks or a month or whatever, but in the long run, over a year, who's going to make the more money? A trading firm like yours that knows what they're doing, or someone like me that's doing their best while running a business, looking after kids,
Yeah.
spending time with the missus, all that
So the
sort of stuff. So
reality is 70% of retail trades on crypto lose, right? That's the reality. And I think most
it's probably higher
importantly,
for me.
most importantly, our product's called Algoz Quant Pro. That's what we've called it. But whether anybody decides to give their coins to us to look after in this vehicle or whether they don't, there's one thing I should say. In this model, you always remain the beneficial owner of your coins. You know the saying, right? Your keys, your coins, right? It's not quite like that because they are in the custodian's trust wallet, but ultimately you're the beneficial owner. Why would you want to get involved in any other trading vehicle now where I would say, don't give anybody your coins, right? Simple as that. Just keep them. If you don't want to do what we're doing, keep them on Ledger. Don't forget your password, right? That's going to be key. Keep them in cold storage because that's the only way that, I just don't see the reason now. I think there'll be imitators of what we do, but ultimately I don't see the reason now why anybody needs to give anybody else their coins to earn, whether that be staking, whether it be any sort of yield program out there. If it doesn't involve you remaining the beneficial owner, then why do it? That's my pitch.
And that was going to be one of my questions, if I can just quickly ask, is and then we'll move on to the future and closing statements. But what custody provider do you use? How do you custody? Obviously, I know you're not physically custodying the asset, but
Yeah.
how do you what product do you kind of
Okay,
help with
so
that part of the process?
the coins are in cold storage, and the company that we have started this operation with is Kamenu, who are owned by Nomura.
Okay, yeah,
We
yeah,
like the backing of a huge bank like Nomura behind it. Kamenu, institutional grade in terms of their custody. And we've been very impressed with their thought process around how to safeguard. And it comes because of the institutional banking that sits behind them, right? That was important.
absolutely. And this is now going to sound like I asked that question deliberately with knowing the answer, which I actually didn't know the answer to. But we'll delve into this more ourselves. But we're actually working or talking to them at the moment around something that we would like to introduce as well. So I totally get why we've been very impressed with Kamenu and everything they
Yeah.
offer. And now I'm based in the UAE. I don't know if you saw recently,
They've
but
got an
Nomura
office
got a
there,
license here,
and you talk to Lawrence.
so
Yeah.
yeah. So
Yeah.
that wasn't a leading question, but it ended up being quite a nice one. Perfect. So yeah, let's wrap this up then in terms of where's the future? What do we think
Yeah.
the future
Yeah.
looks
Well,
like
I
in
think we've had a
general?
good year.
And yeah,
Yeah. I think we've had a good year. I think we picked ourselves up off the floor. I think the things that have happened that are positive. Let's forget 2022. We know there's a lot of pain there, right? Let's look at 2023. I think here's the positives. We answered the existential question around cryptocurrency. When it went down to 16,500, the big holders, like Michael Saylor, for instance, who owns more than anybody else, 156,000 Bitcoin, he could have said, do you know what? I'm out. I've made money on them anyway. What do I care? I'm selling. I've had enough of this. It's too difficult. None of the holders, the core holders, sold at 16,500, right? In fact, they stayed in and they bought more, right? So we answered the existential question. It had its reason to disappear and it's still here. Now, what are we seeing? Every day, and if you follow me on LinkedIn and you follow Algoz, you'll see every day I find a story of TradFi that's moving into the crypto space, and that's big. The biggest one recently, the BlackRock spot ETF that they want. Now, their record of getting permission from the SEC is they've put in over 750 applications and only one's ever been turned down. They obviously have the ear of the SEC. That is going to happen. They talk about that being 10 billion within the first month that'll go into that fund, and 100 billion within 3 months, right? These are huge figures. What's that going to do to the price of Bitcoin? I'm not telling you to buy it. I'm just saying reasons why I believe we are getting positive. I'm only highlighting one story. I could name loads of others. And if you go back through on LinkedIn, the Algoz stories, you'll see every day another new entrant into the TradFi space, from TradFi into the crypto space. So we've settled. We might have put in a new higher bottom at 30,000, 29,000. There's lots of people. Marcus Thielen, who I referred to before, a brilliant analyst at Matrix Port. He's predicting 42,000 by Christmas time. There's others talking the same language. So I think we've got good reason to be positive. And warts and all, we've come out of 2022. Again, if you are still like me, trying to get your coins back from 1 or 2, we hope for good news, and that both the Celsius rescue package and the money they've recovered in FTX, which I believe is getting close to 7 or 8 billion, I'd like to see that back in the hands of the people who desperately need it. That would be a really good outcome to this year as well.
Yeah, no, I totally agree, and I think you're right. The institutional adoption, and this is a timely comment based on when we're recording, not necessarily when this was released, but yesterday, the day before, PayPal, released their own stable coin.
System.
We're recording this on the 9th of August for clarity for those that maybe want to look at that. Now, again, there's a few questions around that, and why crypto people are surprised that a TradFi company has come in with a stablecoin and then added in centralized features to that stablecoin. Doesn't surprise me at all, because why wouldn't they? But the point is that PayPal are entering the market. PayPal are a huge payments firm, and they are entering the market. If that and things like BlackRock and HSBC and all those bits and pieces launching Bitcoin ETFs isn't a bullish sentiment, I don't know what is going forward.
So, Joe, if you look at the adoption of PIX in Brazil, you can see what a payment system does when it runs through for ease for public. This is just going to go through the roof, and there'll be others trying to copy it with some idea of a stable coin backed by dollars. And they won't let them back it with equity, but they'll let them back it with dollars or gilts.
Absolutely. So, well, Stephen, as always, pleasure talking to you. For those that kind of listening and want to get in touch with you or Algoz, where we can obviously link everything in the description, but do tell people where they can find you guys.
I'm really easy to find. If you just go to LinkedIn, you'll find my name on there. Send me a message. I always respond to everybody. I don't care what it is. I'll always come back to people. I'm always happy to meet people. There are lots of opportunities to discuss. So that's the easiest way to find me. And I would enjoy, I love talking about crypto. It's something I believe in. I think we're in a very special space. We're still pioneers. Just remember that. It took the internet 10 years to have a 1% adoption, and the next year it doubled that to 2%. We're in that 2% phase right now. That's coming up, right? This is going to happen. And even if you think, those blokes talk nonsense, be aware of it, because this is going to be a part of your life. I already have a card within a bank account where I can choose whether I want to pay with Bitcoin, Ethereum, dollars, euros, or pounds, right? That exists now. This is where it's going to be, right?
Yeah, and I think that's the thing, isn't it? People say you can't use crypto in the real world, but you absolutely, definitely can, and it's not that difficult to do so. In fact, I'm planning, as soon as we end this call, I'm planning to go to a coffee shop in Dubai where you can buy coffie with Bitcoin. So
just make sure it's not the most expensive coffee you've ever bought, Joe. Okay?
Exactly. As I said, always a pleasure, Stephen, and we'll catch up soon. Thank you, everyone, for listening, and hope you found some value from this. And if you have, please reach out to Stephen and or to Nefos or Miner. So thanks, everyone, and see you all on the next one.
Thanks, Joe. Bye.